Okay, hello traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, November 5th. Michael Boutros on the horn with you. Great to be with you guys this morning. Eman, Jay, Pete, Peter, great to see everyone in the room. Not really a whole lot has changed since yesterday, although we are getting that nice little bounce in the DXY that we were looking at. So we're looking for a trim somewhere in this region. Here's 97.71 on DXY. So very cautious here as we start to make this near-term recovery. Obviously on the menu for today, DXY will hit the setups from last night on Aussie, dollar CAD, gold, crude levels. I just wanted to highlight we came right back into resistance yesterday. We'll go over Euro, dollar Swiss, and Kiwi outside reversal on the daily chart there yesterday. We'll take a look at that as well. All right, any other questions or trade setups you guys want to review? As always, feel free to throw them in the message board at any time. Should be pretty brief today. Here's what the setups look like from last night. So Aussie was my favorite. Okay, the move lower was just about to approach, well, 68.80 was the target. We noted that major key resistance into the start of the week, and everything was the focus was on 69.27. All right, really nice level. You had the 618 retracement of the decline. You had the 1618 extension of the ascent off the low there. Nice pivot in price. That was the weekly opening range high. Here's where we rebounded right off of support yesterday. So the weekly opening range is set right below resistance into the start of the month. Okay, big resistance here as far as the longer term implications of where Aussie dollar is trading on the daily chart. Talked about this yesterday in the webinar on Daily FX. I think I saw all of you there, right? Big pivot in price. Anything beyond here, you're looking for this confluence zone right here, just above 69.60s, 69.50s, that 10 pip range, and look for a bigger reaction there. If we get the, resumption trade, that's sort of the level to be. But I'm still hesitant, okay? I'm still hesitant of chasing this any higher until we establish and this stabilize above 69.27. And that's kind of my line in the sand. So, whether it's a failure right here or whether we plow through and then we look to re-enter on a pullback, just be careful. It's about the 69.27 pivot. That 69.30 pivot is everything for me at this point. On its face value, it's simply set a very nice and impressive weekly opening range, right above slope support, right below, lateral resistance. Here's what it looks like on the 120 minute. All right, so it just continues to just really be a clean setup overall. Maybe you didn't get the spill right off the bat with that decline yesterday, but the levels remain unchanged, 100%, exactly the same. Now, if you were holding a short on this yesterday and 68.80 came up and you got triggered break even on the pullback, don't get discouraged, okay? You kind of made the round trip. Even if you got the break even hit on it, you're still trading against what? Friday's high on any shorts. If we do breach, again, the move is likely to be accelerated. This is a big pivot. 69.50s, 69.60s, that's your next upside target on a breakout in Aussie dollar. So I continue to like this one. I'm flat here. I like the decline in 68.80 again. That's was the first level to hit. That's really what we needed to clear the way for a larger decline. But all things held constant, we still like the upside of Aussie. Here's the longer term picture. Don't forget, keep showing you this weekly chart just because it's so pivotal. So pivotal. All right, and even if you take some parallels here, you can get creative with it, but you can see, man, it's a pretty big pivot here. Hey, Pooja, great seeing you in the room. No worries. Says, sorry, missed your list. Kiwi, Gold, and SPX, if not already. I got all of those except SPX. And oh man, Pete? I did see. Did you see where we topped out yesterday on SPX? That was nuts. Same level. Whoop, This is the weekly. Same level we've been talking about for so long. Man, like you can't make this stuff up. Just a pip off, 30.87. And here's what we've been doing ever since, just kind of crawling below it. Um, yeah, it's pretty uncanny how the technicals have continued to play out there. But we'll take a gander again real quick. Any questions on Aussie before we move off? Listen, still the cleanest setup from a slope standpoint, still the cleanest setup from just a lateral technical level standpoint, in my humble opinion. Immediate attention is on the focus range of 68.80 into 69.30. That's now the weekly opening range. That's below slope resistance. That's above slope support. Really nice setup. Okay, really nice setup. Really tight. Play everything tight here early in the week. Iman says, sorry, Michael, how much time the webinar was running? We started at 8:30, Iman. Right. Just wanted to make sure. Yeah. So we're sticking with the 8:30. I should have probably corrected that, guys. We're sticking with New York hours just for the sake of, of simplicity. So GMT time changed this week. So plan accordingly. We got set back an hour here. So yeah, it's going to be an hour change, I suppose, depending on where you're on time zone. But 8:30 Eastern, Iman, is we're gonna stick with as far as the webinars are concerned. Okay, so look for a break of this focus range. Ultimately, the game is higher, but the pullback play is what we were looking to play if we get weakness below 68.80 on Aussie. So keep your eyes on that. Next up on tap, well, I guess that was number one. Here's DXY. And going backwards order here, number two. This thing is still pretty clean, and we're testing near-term resistance now. Here's what the DXY looked like into the close of October. We were looking at this near-term ascending channel formation. We talked about the fact that even if that thing breaks, you still got key support 97.21, 97.31 on the near-term chart. That's kind of governing, right, the downside. You had the 618 retracement there, former swing lows, and although you did gap above it, you never actually probed and made a weekly close below until this drop here. So to start off the week, we talked about 97.71, 97.87, the same resistance region we talked about last week that held and governed the highs into the open, right? There was the downside break, post FOMC, there was NFPs, support held again down here, and we're simply making a round trip. We're right there, probing 97.71. Again, the top side of that is 97.87. That's the break you need to validate a larger reversal, as it were, in DXY. As it stands right now, we are also challenging the October trendline resistance. 1 touch, 2 touch, 3 touch confirms, 4 touch. Here it is. So for me, as I said yesterday, we were looking for the rebound. Here's the recovery, 97.71, 97.87. These are levels to watch. If we clear this on a daily close basis, yeah, we'd have to allot the fact that we probably have a bigger recovery in the dollar before resumption of the downtrend. So playing it cautious, being mindful of where we are not only in price, but also in time with the start of the new calendar month. Be careful. Here's DXY. I mean, you've seen the weekly chart many times, right? There's 97.87. This is why, again, for me, this is a big threshold I do want to see hold, especially on the fact that last week we made an outside weekly reversal off this threshold of resistance. So it's all about this level again on the way up. Questions on DXY? Keep in mind, you get ISM non-manufacturing data later today at 10 o'clock. Expected to come in at 53.5. The last read, I think, was 52.6, if I'm not mistaken. keep your eye on that, but looking for some event risk to really kick this off as far as this dollar rebound is concerned. See if we can't get some exhaustion a little bit higher from where we are. At this point, if we clear 97.87, just for argument's sake, tack on a quick retracement, just of the near-term decline. And a couple things I want to take into account or look at. Okay. Let's just leave that 38.2 on there just for the sake there. Hmm. Okay. Just a quick rework. Sorry about the silence there. Just a quick rework there. See what this extension looks like, or this pitchfork looks like here. Couple different reference points that you could work with. I tend not to like the action points off of event risk, and this right here I think is FOMC, right? So the other action high behind or ahead of that is the 29th of October. So it kind of looks like a median line break here if we push through. Puts a little bit of focus higher while above essentially that Friday high. So this would kick back your bullish inval to like the weekly open, which works out beautifully, and near-term support to Friday's high. Work with something like that. Feel free to take a snapshot of this, guys. This is probably what I'll be working with just into the start of the week. Now, again, the lateral levels don't change. So 97.87 is still the top end of that support threshold right here, or that major pivot zone that we've been following for so many months. So don't forget that, okay? That still highlights this region, but still on a slope gradient, on a pullback, those are your reference points to look for. And that's really, objectively the weekly open, a break below is what you'd need to see resumption for that final tag towards 96.80 if we're going to get it. But watch this. It's early in the month. I wouldn't put it past this thing to see another rip of 97.87 at least. And we'll reassess there. But that's what we need to see as far as the close to give you the conviction breakout. All right, so a little rework there for the DXY level. Sorry about that on the near term. Next up on tap, dollar CAD. So this is number 3. Here's what Looney looks like. This thing is just holding this slope. And again, having the levels mapped out and everything is great, but there's just no momentum behind it. For instance, today actually already constitutes an outside reversal lower, but you're nowhere near resistance as far as like where the tag was for the weekly range. It's so tight, I wouldn't want to take a stop against the weekly range highs. It'd have to be against Friday's high, and that kicks you out, over 50 pips, 60 pips at this point. Not going to do that. So there's not really been an opportunity to kind of get into a position. If you were tight here or you're playing it into the open of Asia, there actually was an opening range play that looked lower, in which case you're kind of already sitting in a short, but it's really, really tight. Okay, it's been a really, really tight range. You have some data coming out of Canada later this week. So for me, it's kind of, again, one of those ones where we're just starting the month. There's event risk on tap. It ain't worth it for me if I'm not already in it. The preferred move would be kind of the jackknife lower, at least to test the October low day close, like 130.86. That's kind of reaction point I want to see. Something happen there. But we went over the levels on this yesterday, guys. 30.50 is absolutely paramount. That's the 38.2. That's the low day close again from back here in the January drop or the July drop, excuse me, which is obviously the yearly low day close as well. And you have slope there. So it's kind of a catch-22 between whether we get the breakout and the test of 32.31. Like I said, that's your near-term bearish inval. If you get through that, you're probably on a stretch way higher towards 33.50s on a correction before this thing starts to move lower again. But all things held constant, we're trading off of downtrend resistance. No need to complicate it. It's just there's no momentum behind it. And the dollar pullback is a hard trade to get on board now because we just went over the DXY levels and it looks near-term breakout there. You're seeing a little bit of a alleviation in general, just a shift. So you don't really want to try to get too aggressive on it. I'd rather wait for a resumption. I'd rather wait for a DXY exhaustion and then look for, a little bit more of a affirmed high to trade against here in dollar CAD for a move lower. So weekly opening range, you can try to play that. At the end of the day, anything that you take, ideally, you want to get as close as you can towards the upper parallel. If it breaks out, like I said, don't get too excited. 32.31, that's the level that we need to clear for it to be a validated breakout. Even if we were to break out here, I'd still be skeptical. Still be a little skeptical. Okay, so Aussie levels are unchanged. Here's dollar CAD from the start of the week. You know what I mean? It's just the same levels. Ideal scenario is you get that move lower. So like I said, 30.86, 30.50. I mean, I wouldn't even think you'd get 30.50 before another jackknife higher, I think, in dollar CAD. See if that employment data comes out with a kick from Canada. Any questions there? Okay, last but not least, also from last night, gold. Man, have we been talking about this trade or what? Even on this rip. And again, one of the ones last night where I said the same exact thing, I would be very skeptical if this thing broke unless we clear and get a valid push through 1520, 1522. It's going to be a fake out. And that's just because of where we are in the technical pattern and the broader things. We talked about this and we talked about this at length, guys. We essentially failed the October opening range highs last on this breakout of this so-called channel and on this last run right here. On the intraday charts, we talked about the fact that it just looks like a consolidation structure. It's all it is. In which case you had 1 point, 2 point, you tested the third reference point into the close of last week. So into the start of this week, you already had a 3-point resistance trigger, or a 3-point resistance trend line, excuse me, which held right into the weekly open. And it's just too clean for there. It just looked too weird for us just to get a resumptive trade. In any event, we're not out of the woods yet. We're still within the confines of the consolidation structure, but certainly at least the turn lower was really welcomed here. So levels remain unchanged. Here's the first target at 1495. What's 1495? I think that's the reversal, outside reversal close that we made for October 30th on that pull lower. So that was the first target. We're on site there. Look for slope a little bit lower near 1485 on a resumptive move. We still need to clear the consolidation, like I said. And I told you guys yesterday, 1482 is the level for me that'll sort of suggest that that's underway. Okay, so we get a 1482 break. All right, at that point, I think you look for a move at least to the ends of the October opening range lows. And that still opens up basically 1460s. So doing well. And again, it's not the dollar strength story here is only going to propagate this even further. So if the dollar rebound, excuse me, gets a little bit more legs under it, expect this to hit the lower bounds of the consolidation structure, but treat it as such. Treat it as such. This isn't a breakdown necessarily per se yet. Until we clear 1482 on the downside, you're just playing within the confines of the consolidation, the contraction in range. Questions? All right, and don't forget where we are in the broader picture. I show you this chart a lot, but I think it's still worth it, to keep in mind and always be mindful of where we are in the weekly standpoint. Here's a 5-year, 6-year stretch of gold prices. We came off of massive resistance here, huge uptrend resistance on all different types of time frames. So this is still the whole move. Even if price were to drop into parallel support, that's still 1482. You see where the cursor is? So let's see what gold's got in store here on this move. Near-term resistance, and I guess I would say bearish invalidation for the objective move right now. I'd have it the weekly open. Right there. Okay. If we make it through the weekly open again, yeah, I mean, at that point, you're basically testing the upper bounds of the consolidation. You're looking for another test of 1522. It's pointless to try to press or be short against that if that breaks. Does that make sense? Right on. All right. Last but not least, crude prices. I just wanted to throw this chart on there because someone asked on Daily FX, and again, I'm a little bit more limited, guys, with what I can say on that forum. There's, always well over 100 people in there, so like, I can't always be as forthcoming as I want to with you guys. Here's crude. I mean, this thing, resistance is resistance. 57.17. If you guys remember the previous update, that was sort of the last target on the upside that we said we needed to see a break to fuel the next leg higher in price. Well, we tagged it into the start of this week and pulled back. And not only did we pull back, but it was a pretty strong sort of kickback off it. And to me, I still think the risk is for some sort of near-term pullback to get long. At the end of the day, you're still within the confines of the uptrend. You're still within the confines. This is the same pitchfork that we've been following. Here was the update from the 28th. The same pitchfork. In fact, even the update before this on the 23rd. Same pitchfork. We've been following this same gradient for some time. Here was the bounce, false break of the lower parallel. It's the 50% retracement. That's not necessarily why I think it's such a pivotal move, but look at this thing on the daily chart, and then look at this thing on the weekly chart. Again, the momentum is pitiful on all different time frames. You're hitting 60 on the daily. You're hitting 60 on the or we're hitting 60 rather on the momentum on the daily chart. There's that 50% retracement, but also, now technically, if we were to close right here, you'd be having some decent divergence. Price action with a higher high, the oscillator with a lower high on a closed basis. Third day consecutive advance. I mean, maybe it's me just trying to call high and being stubborn. I thought we would get a little bit more of a kickback, but at the end of the day, the levels are clean. If you get a topside spike, the play would be for either fading strength into the upper parallel, fading strength into 58.62. If it breaks weekly open support, you look for the washout near 55, 54.90s. This is where you'd look to get, look for exhaustion on the downside. So if you're holding longs, these are your next upside levels. Look for the upper parallel. If we get in there ahead of time, look for a reaction there. This thing has been too clean to ignore. If it fails, or even if we get to the upper parallel, this is a level of interest for failure as far as trying to play at least an exhaustion play move lower. If the opening range here resolves, this opening range, which is what I was hoping we'd see yesterday, just resolves lower with a break of the weekly open, there's still a decent play here. You're either looking for a spike low here for possible entry, or if you're holding shorts off the high right now, that's sort of your downside targets. Would be the parallel here near 55.50, let's call it, and 54.95. So I think this is going to offer a decent play. It's either the spike into resistance for a short off this region, or ideally you get the washout first for the entry. But the crude price range, at least in general, which cleared to the upside last week, does look pretty decent. Does look pretty decent. So I know there's a couple of questions from the webinar yesterday on this. Anyone trading or anyone have any questions here on crude? That is number 5. All right. Let's take a step back here into euro. Here's what the euro setup looked like in the previous update. And here's where we opened the week. So right off the bat, there was 3 levels that we talked about. It's the same 3 levels. You can go back into the reports for like the last 3 weeks. We've continued to highlight them on the upside. 1160, 1166, 1186, and 1208. We've been talking about those levels for a while because they're just stacked up with technical significance. 1166 is just a major, not even a major, just a really clean pivot in price that we had eyed out. Just a lateral level, guys, not even something, a measured move, but it's continued to offer really sweet responses in the last 4 attempts. 1186, that's the 618 retracement, okay, of the decline off the highs, or excuse me, off the ascent from the lows in 2016. And then you have 1208, which is the 618 of this year's decline off the last stretch high we made in June. So 3 topside targets, all of them converged on slope. We opened up the week saying, man, it's stacked up here, okay? And the idea was it's either exhaustion push higher towards these targets for a failure, or if we get the pull back towards 1186, 1065, look for entries down there. So basically what happened, man, we came into 1186 right into the start of the week where we opened, again, failure. Here's the pullback. So levels are in play as far as a near-term downside move. Here's 1186. I'm sorry, 1106. You guys remember that was a level that we were talking about for quite some time. It ended up being a monthly open a few months back. We're pushing through that now, okay? I wouldn't chase this into a fresh short positioning, but if you're holding shorts from here, choke up your stops a little bit. Stop would need to be against that swing high, or, I mean, if you have anything better, well, let me take a step back. If you're short from anything around the weekly open, put your stop here and lock in some profit. Look for a response at that parallel, and a 38.2 is the same exact level that we mapped out last week, guys, 1065. So no change on the downside targets. Well, here's what euro looks like. Again, yesterday did technically constitute an outside daily reversal, right? Lots of outside daily reversals. And if this is a true break of the slope that we've been following from the lows from September and October, well, might have a larger correction in play here in euro before resumption. Long story short, 1065. Slope and then 1065. Look for a reaction down here. And in fact, if you guys will entertain me just for a moment, I just want to see what this looks like. Bear with me one sec. Okay, it's too early to rely on this slope, but let's just keep that in focus for right now because it continues to highlight 1065 anyway. And see what that looks like. I know this might be it might look a little messy at home, but just focus on the lateral targets we just talked about. Looks like DXY is making a little bit of pusher. 97.87. Yeah, there's room. Any questions here on euro? All right. Okay, dollar Swiss number 7. This one made a move too, as far as the dollar strength is concerned, taking it through that near-term resistance target at 98.90 that we talked about into the start of the week. That was kind of the resistance barrier. Um, we we never got the strike of 98.43. Okay, yearly open 98.38. We never got it. That was the zone down here. Here's the turn. We tagged this as resistance yesterday and actually looked really good. But here's the near-term resistance range break. Leaves the opportunity for a stretch higher. Again, that's dollar strength. Pointless to fight it. Looking towards 99.30s. Forget last week's open at this point. And that 618 is still in play because that low was preserved. So um, interestingly enough, I don't want to get too granular on this, but if you tack this on, actually, the 618 is just higher from where we are. Don't want to sit there and start chasing levels because, again, the slope is just higher, but it gives you the picture of how much of a crawl, how much of a rebound, of a stretch this recent little pop higher is. 99.25, let's call it 99.30s. You're looking for the upper parallel. You're looking for that 618 on this dollar Swiss stretch. The formation levels still look the same. Still look the same. Not surprising, guys, early in the month to get these kind of crazy little stretches here, and especially November. Let's see how this pans out. All right, not much to say new on dollar Swiss there, so we'll let that one sit. Kiwi, here's number 8, New Zealand dollar. Nice little drop, came right into that 64 target to the downside. Here's what it looked like earlier in the week. We were coming into that resistance at 64.50, looked for the exhaustion on the push higher. There it was, downside break back below. Remember, it was all about this 64.24, 64.28 level. The fact that we had popped through that multiple times, but even on that stretch that we made on Friday post NFPs, we closed right there. And that's what was the focus that we talked about in the webinar yesterday. We never closed above it. Then yesterday we made a massive outside reversal candle off it, kind of highlighted the risk lower while below 64.24. So here's the move, pop back into essentially the weekly open, didn't even get a tag of it before it pulled back. You have a pretty decent weekly opening range now. It's a little bit sizable. I'm still looking for an exhaustive push lower. So like, I mean, if you took it off and you got out at 64, I don't blame you, but the next the level will be 63.84, and then this would be the sweet spot for me. A 38.2 tag would come right along slope. So something like this. All right. Your near-term resistance at this point is still this. Okay. And then a topside breach if you do get resumption. And ultimately, we do think you get resumption. It's still an uptrend, but we're still under the assumption that we get a larger pullback first within the confines of this uptrend. So ideal scenario is 63.65, my humble opinion, if we get it. If we clear the opening range to the upside, the levels are unchanged. So 64.80, 87, 64.80, this whole zone near the upper parallel at 60, just below 65. Looking to buy back at 63.60 or so for the resumption. Pooja, that's my ideal scenario, my humble opinion. If we get that move there, I would love to see more basing along that slope. Yeah, for the continuation higher. Like I said earlier in the week, I find it hard to believe it was just going to continue to rip, especially with Friday's failure to close 64.24. I thought it was going to be hard for the thing to rip higher. So even when we broke, I mean, the move looked good, at least for a drop a little bit. And you had obviously so sad to see I'm sorry, there's some headlines hitting here, some just Trump nonsense. Okay. So yeah, Pooja, does that answer your question? 63.6, yeah. for the resumptive trade. That's where I'm looking. That's where I'm looking. If we get the stretch lower. All right, and all things held constant, that's exactly what you want to see, for an exhaustive trade, outside reversal pattern into and through test of resistance. Again, if you put this on a line chart, it looks like it never even broke. You see that? So all I'm doing, guys, is stressing the close. So sometimes removing the wicks, sometimes removing the intraday price action can oftentimes add clarity. A lot of people are going to be screaming triple top here, but you get the picture, right? Really makes this thing a lot clearer. Also, the patterns that could, possibly be emerging. Massive inverse head and shoulders here could be a play, right? Pooja, I beat you to it, right? She just wrote that same comment in the field there. There's a lot of different things and benefits that you will, uh, you know, that you can benefit from, I guess, for lack of better words, in just looking at the closes and just take into consideration where price action closed. Now add to this the fact that we've mapped out these levels of lateral resistance, that we've mapped out these slopes, and that candle patterns can in fact help. And an outside reversal off the high, certainly for me, at least near term, can shift the risk and highlight the risk for a near term move lower. Questions in Kiwi? All right. So here's what I'm looking at with the SPX, guys. I'm reluctant to talk so much about it, especially on in the public forums, because we're drawing into uncharted territory. And when I have slope, and for the Pete's that are in the room, when I have slope and when the slope was so clean as it was for a while here, both on the way down and the on the way up, I was all about it. I was putting the reports and I want to share it with you. But from here, it's really tough. It's really tough. Did I think that the lateral level of a 1618 that had eyed out months ago at 3087 was going to be playing like this? No, I didn't. But here we are. So listen, it's, I don't want to get too granular in this because there's not even back and forth action. I was literally looking at this from like a 5-minute chart the other day, trying to find, something to give us direction, slope, a gradient of some sort. It's just not there. At least I can't identify. I mean, maybe you guys can probe Jamie later in the week and see, where we can come out. But every time I try to grade this, it doesn't hold, and the uptrend breaks resistance, which is the accelerated move. So it's kind of like, well, how aggressive do you want to get with it? I'd rather just work with the lateral levels that are working. You know what I mean? I don't have anything above 3087. I don't have anything above that, even on the daily chart. I don't have anything above that until you get into like 3113, 3115. I think that's the level I talked to you guys yesterday about. That's just a parallel. So if you take the parallel of the slope support from these lows and extend it off these, or I'm sorry, this is actually the resistance slope that's extended off the parallel from the lows. That's a 1 touch, that's a 2 touch, that's a 3 touch, right? We never got a 4th. So the extension top here, Pete, as per your question, would take you back into 3113, 3110. That's what I was telling you guys yesterday. If it exhausts here, Pete, Pooja's asking, in the SPX, what trigger would you use to short? Good question. Good question, Pooja. Yeah, I would need, I mean, like you're talking intraday, because here's the thing, guys, you don't want to fight this rally until you get some topping factors. Outside reversal, a reversal candle in general, just a reversal formation in general, a consolidation, a near-term, contraction break. a false break here in 3087 and a close back below today, that for me would be exhaustion, in fact, Puja. So one of my favorite plays is when you come into a resistance range like this, you get to push higher, but then the daily candle closes or resolves lower. That typically is going to be a decent play, or oftentimes is a decent play to short the high or against the high for the pullback. That would be a condition that would have me looking for a move like that. Um, but just trying to short into resistance because it is resistance in and of itself is not good enough for me, right? If that was the case, every single tag of resistance you'd be in a short, and every single break of resistance you'd be in the red, right? So those are the conditions I'd want to see at least in near term price to kind of get us going. But again, it's tough to try to fight this condition at this point. So a couple of different things that we looked at. You might have seen Jamie's call yesterday and the put call ratio, some of that stuff that are suggesting, again, you're heading towards extremes, but it could be just a washout before resumption higher. Don't make assumptions. As far as the near-term price action is concerned, that's what I'd be looking for. If we pop higher, Pete, 31.12, 31.13, that region is where slope would start to be, the next focal point on the breakout. Make sense? Pooja says, thanks, academic question for now. No worries, Pooja. Hey, Pete says, thanks, you're more than welcome to that on that, Pete. Good luck. This is it's exciting stuff. Obviously, we always like all-time record highs, but it always does make it harder unless we actually have some like slope and some structure to the ascent. I'm not necessarily irked the fact that the market's rallying. It's great. I'm irked that we haven't gotten back and forth on it. We haven't gotten some sort of pullback, some sort of corrective bounce, because that's what offers structure. That's what gives guidance to the gradient to the advance. When you see a market like this, it does make it very challenging. But I'm sure we'll get some back and forth. Watch this resistance here. All right, any other questions before we wrap things up? We'll be back on board on Thursday morning to call things out again to the close of the week. It's kind of light on data. Don't forget, into 10 o'clock, you do have some of that stuff coming out with ISM from the United States. So keep the powder dry as far as that's concerned. And remember, we're just starting off November trade. There's tons of room, tons of time, and tons of opportunity to get some further clarity on these setups if you don't have a position already. All right, guys, best of luck trading, and I will see you on Thursday. Cheers. Thanks, man. Same to you.